the suckers. We're the suckers for getting all this merchandise, right? Yet they get the paper dollars. He's got it backwards. It's China. It's the rest of the world. Those are the suckers. Those are the patsies. They're getting paper. We're getting real goods that make our lives better, and they get paper. Those real goods, require devoting a lot of resources, land, labor, capital, right? Equipment, buildings, lots of stuff goes in to producing the goods that we consume. Nothing goes into producing the dollars that they get. We create them out of thin air. It costs us nothing. So who's the sucker in this relationship? The country that gets all this great stuff, or the countries that get fiat currency?
In today's news recap, Goldterra raises funds for exploration at Conmine and Northbelt properties. Goldterra Resource Corp closed a non-brokered private placement raising $572,500 Canadian dollars through the sale of 11,450,000 shares at 0.05 per share. Proceeds will fund exploration at the Conmine option and Northbelt properties. CEO Gerald Panetton shared plans for the Campbell Shear target. Our 2024/2025 program will resume with the wedging program, which is testing the Campbell shear structure with our completed master hole below the existing working of the Conmine, which produced 5.1 million ounces of gold at an average grade of 16 grams per ton. Now we'll show you more clips, but first check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
I mean, people would just want it. They would want to accumulate dollars. We wouldn't have to force anybody. We wouldn't have to twist their arms or try to blackmail them into holding the dollar. They would just hold it. Now, the fact that Donald Trump is worried about the BRICS moving away from the dollar at least shows you that he's smart enough to recognize how bad it would be for the United States if they were to move away from the dollar. And the fact that they could move away from the dollar just shows that the dollar is not as strong and almighty as Donald Trump claims it is, if he's so worried about the consequences of the world moving away from it. Because in the past, we wouldn't have had to worry about that at all. Wouldn't have mattered. But the fact of the matter is, and Trump must know this, our entire economy depends on the dollar as a reserve currency. Now, the fact that Trump is making these threats is not going to slow the de-dollarization process. If countries have decided that they want to move away from the dollar, they're going to move away from the dollar. It doesn't really matter what Donald Trump threatens. Now, they may not form their own currency. In fact, they already announced, even before the election, and I talked about it from that last BRICS summit that took place in Russia, that they had no short-term intention of creating another currency, but they did want to do more trade amongst themselves with their own currencies and not the dollar. And there is no way that Donald Trump is going to stop that from happening. He can't force China and Russia to invoice each other in dollars for bilateral trade. Why can't they trade in rubles or yuan? Right. And that's what they're going to do. And they're going to do that more and more. But the funniest part about it, and this is what I'm going to talk about mostly after this next commercial break, is the idea that Donald Trump thinks America is the sucker in this relationship, meaning that Americans are getting all this stuff that foreigners are producing, and all we're doing is printing money and paying with that. And we're the suckers. We're the suckers for getting all this merchandise, right? Yet they get the paper dollars. He's got it backwards. It's China. It's the rest of the world. Those are the suckers. Those are the patsies. They're getting paper. We're getting real goods that make our lives better, and they get paper. Those real goods, require devoting a lot of resources, land, labor, capital, right? Equipment, buildings, lots of stuff goes in to producing the goods that we consume. Nothing goes into producing the dollars that they get. We create them out of thin air. It costs us nothing. So who's the sucker in this relationship? The country that gets all this great stuff, or the countries that get fiat currency, right? They're the suckers. Trump has got it backwards, and I'm going to explain that more in a minute. So,
in today's news recap, silver gains as investors continued to assess the latest economic data. Silver prices gained 0.42%, bolstered by expectations of a Federal Reserve rate cut in December. Core PCE prices in October remained aligned with market expectations, maintaining hopes for a 25 basis points rate cut, which supports silver by reducing the opportunity cost of holding non-interest-bearing assets. Meanwhile, robust Q3 GDP growth, strong personal income and spending data, and historically low unemployment claims highlighted the resilience of the U.S. economy. Initial jobless claims remained steady at 213,000 for the week ending November 23rd, below market expectations, reinforcing the strength of the labor market. Globally, silver faces its fourth consecutive year of structural deficit, with a 4% decline expected in 2024, bringing the deficit to 182 million ounces. Despite a 1% increase in supply from key producers like Mexico, Chile, and the U.S., record industrial demand, recovery in jewelry consumption, and higher recycling will continue to strain availability. India's silver imports surged nearly tenfold to 4,554 metric tons in the first half of 2024, driven by solar panel and electronics demand, as well as investors seeking better returns compared to gold. Silver is showing signs of fresh buying, with open interest increasing by 11.4% to 25,927 contracts. Prices are finding support. On the upside, resistance is pegged, and a move above could see prices testing higher highs. Now we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
Donald Trump believes that Americans are suckers for allowing the rest of the world, in particular the BRIC nations, but pretty much everybody else, by allowing them to provide us with all sorts of consumer goods. We're suckers for accepting all those goods and giving them our fiat currency, our paper dollars that we create out of thin air. In order for foreigners to supply us with goods, they have to produce those goods. That means they have to take resources and devote those resources to the production of those goods, meaning that those resources are not available for other things. They have been diverted to produce the things that we need at the expense of the things that they need. So the world lives beneath its means so that Americans can live way beyond their means, and somehow we're the suckers. It's completely backwards. The rest of the world are the suckers. We are going for a ride on a global gravy train. And Donald Trump is threatening to jump out of the gravy train, right? He wants foreigners to say goodbye to the U.S. market. Well, if foreigners say goodbye to the U.S. market, then Americans have to say goodbye to all those goods. So I want to go over all the goods that we would have to say goodbye to. If Donald Trump were to carry through with his threat, right, to impose a 100% tariff or whatever, to make sure that all these nations say goodbye to the American market, right, what would America have to say goodbye to? Well, I just jotted down these categories of goods, and I'm going to go over them one at a time. So consumer electronics, 90 to 95% of all the consumer electronics that Americans buy is imported. 90 to 95%. So if the countries that produce all those consumer electronics, if they have to say goodbye to us, then we have to say goodbye to consumer electronics, right? What are we going to do in America if 90 to 95% of the consumer electronics are gone, right? All we have to buy is the 10% that we have left. First of all, can you imagine how expensive they would be, right? You reduce the supply by 90 to 95%. And now we have to bid for what's left. Plus, what's left is probably not nearly as good as what we no longer get. So we import 90 to 95% of our consumer electronics. So other countries have the ability to produce these goods. We don't. If we could produce them, we'd be doing it right now, but we're not. We're relying on foreigners to produce 90 to 95% of our consumer electronics. What about furniture? 70 to 80% of the furniture that Americans buy is imported. That's a lot. So could you imagine if we had to say goodbye to all that furniture? How expensive would furniture be in America if you took away 80% of the supply and all we had left was the, 20, 30% that we make here in America? Imagine, right? Toys, Christmas, holiday season. 95% of the toys that Americans are going to buy for Christmas are imported. 95%. 85% of the total, not of the 95, but 85% of the toys are coming from China alone. That one country. China makes 85% of our toys. Pretty much without China, there is no Christmas, right? What do we got left? If we import 95% of our toys, we only make 5% of the toys that we consume. Imagine what would happen to the price of toys. We wouldn't even, you couldn't even get them. They'd be in such scarce supply. They would be so expensive. Our Christmas is made in China, right? Without China, we cancel Christmas. So if Trump wants China to say goodbye to America, well, America better say goodbye to Christmas, which might not be a bad idea, given what I already said about how broke we already are. What about shoes, footwear? This one's a killer. 99% of American footwear is imported. I'm not making this up. 99%. So if foreigners have to say goodbye to America, America has to say goodbye to shoes. That's it. We're walking around barefoot. Obviously, we have our old shoes that, we don't have, so we still got those, but we ain't buying any new shoes, right? The shoe industry is gone. 1%, that's all we make. 1% of the shoes, we import 99%. If anyone wants to say, hey, we got a strong economy, why can't we make shoes? If our economy is so strong, can't we make some shoes, right? What's the big deal about making a shoe? We can't do that, right? And that means, it's dress shoes, sneakers, tennis shoes, all that stuff. It's all imported. Bicycles. The Wright brothers who invented the airplane, right? They had a bicycle shop, right? So I know at one point we made bicycles in this country. Not anymore. We import 99% of the bicycles. Without imports, we say goodbye to bicycles. That's it. No more cycling in America. 99%. Can't we make a bicycle? How simple is that, right? We can't even make it, right? So I don't want to say goodbye to bicycles. What about auto parts? Oh, okay. We import 70% of our auto parts. So imagine how much auto parts would cost if we had to eliminate 70% of the supply. And of course, some of those parts, are key. You can't interchange them. So if foreigners have to say goodbye to America, well, America is going to be saying goodbye to most of its auto parts.
What do you think about Peter Schiff's insights in this episode? His bullish outlook on gold amidst the pullback, his skepticism about Bitcoin's sustainability, and his sharp critique of tariffs and their damaging impact on the U.S. economy offer plenty to think about. Do you agree with his assessment of the dollar and the economy's trajectory under these policies? Let us know your thoughts in the comments below. Don't forget to like, share, and subscribe for more financial insights. Now check this video right here because it's a perfect fit for you. I'll see you on the other side.